Hi, and welcome to our video tutorial on financial modeling for beginners. In this video, we will provide you with a step-by-step guide on how to build a financial model, which is a crucial skill for anyone seeking to enter the finance industry. Whether you're preparing for an interview or simply want to improve your technical skills, this tutorial is for you. Now, let's start by defining what financial modeling is. Financial modeling is the process of building a mathematical representation of a financial situation or statement. This can be done for a variety of purposes, such as projecting future performance, assessing risk, or making investment decisions. In order to build a financial model, you will need to have a strong understanding of accounting principles and financial statements. Now that we have defined financial modeling, let's move on to building a financial model. The first step is to gather the necessary data and inputs for your model. This may include historical financial statements, industry data, and other relevant information. Once you have all the data, you will need to organize it into three main financial statements: the income statement, the balance sheet, and the cash flow statement. The income statement shows the revenue and expenses for a specific period of time, typically a year. To construct an income statement in your financial model, you will need to input data such as sales, cost of goods sold, operating expenses, and taxes. Once you have all the data inputted, you can use formulas to calculate important metrics such as gross profit margin and net income. The balance sheet shows the financial position of a company at a specific point in time, and includes assets, liabilities, and equity. To construct a balance sheet in your financial model, you will need to input data such as cash and cash equivalents, accounts receivable, inventory, accounts payable, and long-term debt. Once you have all the data inputted, you can use formulas to calculate important metrics such as current ratio and debt-to-equity ratio. The cash flow statement shows the inflows and outflows of cash for a specific period of time, typically a year. To construct a cash flow statement in your financial model, you will need to input data such as operating cash flows, investing cash flows, and financing cash flows. Once you have all the data inputted, you can use formulas to calculate important metrics such as free cash flow and cash conversion cycle. Next, you will need to organize your data into categories such as revenue, expenses, and assets. This will allow you to create formulas that will calculate important metrics such as net income, cash flow, and return on investment. The last part of the process is testing and refining your model. Once you have built your financial model, it's important to test it and refine it to ensure that it's accurate and reliable. This may involve using sensitivity analysis to test different scenarios and assumptions, or comparing your model to industry benchmarks. Congratulations, you have now learned the basics of financial modeling. By following these steps and practicing regularly, you can build your skills and become a proficient financial modeler. Remember, financial modeling is a valuable skill for anyone looking to enter the finance industry, and can help you stand out from the competition during interviews and on the job. Thanks for watching.